both in all social media as usual, along with the via our webinar service, go to webinar. So welcome, a live analysis Wednesday 30th, the very final day of the month, and that means usually a lot of money flows, end of the month flows, repositioning the markets, and etc. However, we have seen, let me share also my screen before I start briefing you up where we're standing so far today. Okay, that's the dollar index. So let me just double check. By the way, if you're facing any audio or video or visual issues, just let me know either below our live stream in social media, YouTube, Facebook, LinkedIn, and etc., or in the question box in the GoToWebinar app. So just let me know whether you can hear me or you are facing any technical issues. So, as I was saying, is the very final day of the month, and that along with the fact that we have well, the highlight of the day is the speech from Mr. Powell. It kept a bit the market and the sentiment cautious. So we have seen a lot of sideways moves, a lot of and even muted moves. I mean, just small body candles and etc. So I'm gonna put my caption. Okay, perfect. Emma, the very first, as usual, with the oil. Okay, you surprised me. You didn't ask about stocks. So, but Emma, give me a few minutes just to very briefly very briefly summarize what happened so far this week. Okay, so you're loud and clear. Good day to you as well, Fidelis. So as I said, a quick briefing. Okay, so the key, actually the one of the factors this week, and it was a key factor on how the week started. It was the Chinese situation in regards to the COVID, any easing of restrictions, reports about vaccinations again for over 80 years old, obviously, but and the protest. Sorry, I forgot about the protest. This is something that added some volatility on the beginning of the week, actually significant volatility in the beginning of the week. And if I just emphasize on dollar, for example, we had, you see, some safe haven in the very safe haven bids on the beginning of the week. That was on the 3 days protest in China. The markets, however, has started to ease a bit, even though they remain cautious in regards to what will happen in China. However, the fact that there were some reports in regards to a more soft stance from the government in China in regards to the COVID is a bit any worry eyes for the situation there. You understand that you might think, but what has to do with the market? It has, because anything that is one of the biggest economy, right? So any hint in regards to tighter restrictions or easing of restrictions that imply that the economy in China will be affected as well. You know, with the manufacturing protection, the industrial protection, etc. The opening, the economy was open in China. So any hint in regards to closing again, that affects the global demand, and that's why we have seen this immediate impact, a sharp impact into the markets, commodities, dollar, risk-sensitive assets, stocks, etc. However, since for the time being there were reports from the officials and that there would be an easing in the approach, in the stance, a softer stance on COVID emerging in China. in Chinese officials, that spread some hopes and kept a bit the sentiment steady, I would say. So that's why the attention in this final day of the month is now on Mr. Powell. And why is on Mr. Powell? Because there are a lot of expectations, speculations that he's gonna be hawkish. He's gonna actually go in line and on the same side as Bullard, Williams, um, um, it is expected to be as hawkish as them, so to resume this hawkish and to highlight that tightening is still the stance for the Fed, even though we have seen inflation lower than a bit lower than the ticking a bit lower than what it used to be. So now, so thank you very much. Before I don't see any questions other than Emma and the oil. I'm okay. We have some. Hello everyone. So gold and oil. Nothing else for the time being. Okay. And cable. Sorry. Okay. Three assets for the time being, guys. This is your session, so you can ask anything you want. Okay. Whether you are struggling to understand something or you want me to analyze an asset, etc. Time frame maybe that you want me to analyze if there is something particular that you have in mind. So I'm here to help. Let me scan a bit of my points just to see whether I'm missing anything. This morning, yes, I did miss something. So this morning we had further declines. I'm gonna shift quickly to euro dollar, and the reason why is because we had German jobless rates earlier and the eurozone inflation, harmonized inflation number, both dipping lower, dropping. So let's take one by one. What the German jobless rate means. Sorry, the jobless rate in Germany rose higher. So what it means more unemployed people, unfortunately, in November in Germany, one of the biggest, actually the biggest economy in the eurozone. So just that is pushing even more to the ECB to keep its to proceed with another rate hike in December. However, we have seen inflation, the harmonized inflation, as I said, dropping to 10%. So in October, the eurozone inflation was at 10.6%. Okay, so it now it has dropped in the headline has dropped to 10%. So 6 points lower. So that correction, that pullback, it doesn't necessarily mean that okay, ECB has done what it takes and it was doing great and it can stop increasing rates. No, that's not still the case, because 10% inflation is really high still. Okay, it might be that looks to be just a correction if we can explain it, just a correction due to the correction of due to the lower energy price inflation, to the deceleration of the energy price inflation, but that has helped until at least intraday the euro dollar a bit. So from the top that we've seen at 1039, let me just put the line on. We've seen a bit of a dip after the data, mainly driven by the inflation, but that doesn't change the overall picture for the Eurozone and for the ECB, that they still need to fight inflation. They still need to proceed with another rate hike in December, which is expected at 75 points, which is still a possibility. Whether they're going to proceed with less than 75, who knows, but 75 is still a possibility for ECB. So this decline was on the lower inflation, but nothing is really changing the bad outlook, the negative outlook for the Eurozone's economy. Bank of England, we had some speeches from the Bank of England officials, Barley and Peel. Same thing, unfortunately. They still flag further upside risks to inflation, so that implies to move on to more rates in order to fight inflation. And if I have somewhere the pound. Here we are. So pound a bit undecisive over here, but stuck at 120 level. So that was very, very briefly. I said what we're expecting from Powell tonight. The other thing that you need to keep an eye on is on the growth today for the third quarter, the GDP growth, the GDP for the third quarter in the United States, okay? And also the OPEC meeting. However, the OPEC meeting is during the weekend, so on Sunday more precisely, but this is something that we should keep an eye on, especially as we move into the new month, into the new week as well. So the upcoming meeting in OPEC over the weekend will be key as well for the outlook of oil, and we're gonna figure out, we're gonna actually see whether the OPEC will keep supporting the oil. So now, anything you need from fundamentals, just stick it in the below, and I will reply as soon as possible. It's not what will happen with euro today, my dear FX cheats, but it's what will happen with dollar, to be more precise, because as I said, is the third quarter GDP. ADP as well is not so significant, but it's an NFP week anyway. And Powell, mainly Powell. If so, let me just get back to the dollar. If Powell comes with an even more aggressive and hawkish speech, okay, signaling that they are not ready for an easing of tightening yet, and etc. So that would be the key. That would be what will drive dollar, and as a consequence, the rest of the dollar crosses. So it's not so much about euro, but about dollar and Fed, Powell. So you see what happened on the okay, that was a compo. This rally over here, you see this rally over here was a combination of China and the Fed speeches, Brainard, Bullard, and Williams. So theoretically, a really hawkish Powell today could push the speculations for for more rate hikes, more precisely, possible another 75 points in December. But it's month end as well, so it might be okay. It might be an attempt to for repositioning, so we need to be extra careful. So let me take one by one, and let's move on to oil quickly, since Emma asked for it. And as we have seen, interestingly, oil this morning in the European Open, it exited. This is 1 hour chart, by the way, guys. Okay, this is 1 hour chart in US oil, and we have seen that oil exited posted a breakout of the range that we have seen since Monday night. So Monday night to Tuesday's trading. It posted a breakout and extended gains so far, even though it looks a bit overbought for the time being. MACDs keep rising, RSI at 69, and let me use my intraday setup in order to help me further. Here we are. So as I was saying, it exited that range, that double top, 200-day period moving average, rising moving averages. The 9 is ready to cross also above the long one, the long-term one, the 200 one, extending higher, breaking Friday's top as well. And I'm gonna use actually, since we are covering 1 hour chart first, I'm gonna simply use the okay, here we are. I'm gonna explain right now, guys. Just let me just zoom out so you can see everything that I do. So here we are. So that was already broken. That latest resistance in last week at 80.50 territory has already broken. So the very next resistance is at around $81. You see, it was the bottom last week, which converted into resistance as well. While on the break of it, and we go back to 82. To be more precise, that would be, yeah, here we are. So I'm going to zoom out. I'm going to show you. Here we are. So momentum is increasing intraday. RSI doesn't look ready to have a pullback yet. Stochastic the same, keeps pointing higher, presenting that there is further steam and further area to be covered. So the very next resistance area for oil, the key resistance area is the around 81 level. So let me just put it over accurate. Here we are. That's the 81, 83, 82 as well. And in case of if we've seen a very decisive break of these resistance levels, then the attention could turn to the 161 extension territory at 83.25. But let me just, you see, that's the 30-minute chart, and the reason why I put that on is just to see whether there correction started or not. Because as I mentioned earlier, it looks a bit overbought. The candles are outside the Bollinger, so that implies to our overbought condition, which usually needs a correction, needs some kind of a pullback. However, none of the indicators indicate, or neither the candles indicate that there is for the time being any correction path or pullback. So bump, retested again that high, closed a bit lower, but as long as it didn't move below the mid of this candle, you see the sellers tried to take the control and they didn't manage. So that is not, that bearish candle is not an indication that they have taken the control. That's just a bit of a correction, failing to take the control. It would have been an important candle if and only if it was closing below at least the midpoint of this candle. Okay, so a bullish one follow with no tail. Can you see that? No lower tail. That suggests that bulls are in control. And there's another extension high for the time being. So there is still an increasing, based on the indicators in our candle, there is still an increasing bullish bias intraday in the very short time frame. Right now, that's my 30 minutes chart for US oil. Now, I'm gonna zoom out and go to the daily chart just to and clear all these lines to see what's going on over here. So if we had a word to say in regards to the last 2 months trading in oil, it would be neutral. So regardless of this continuous decline that we have seen in oil since May, the last 2 months, so as we had entered the fourth quarter of the year, oil steady. So it's still struggling to extend lower, breaking the 72 floor, and struggling also to post a reversal of the trend or to extend to break that 93 territory. Let me just round it up. There we are. So can you see? So bounce, struggle, pull back, attempt again to break the 93. So we have a double top over here, double fractal at least, and a pull back again, retesting this 72 territory, but failed to break it. So there is a neutral the fourth quarter for the time being in oil overall. Okay. Now, so that's why I'm gonna just put my Fibonacci's on. Okay, just to show you that regardless of this latest 3-day boost, this bounce over here, the asset remains below the 23.6 Fibonacci level since May down leg. So the overall picture remains neutral to negative. But I will just zoom in just to show you something that I just noticed actually. I don't know. And you see that? That looks like a morning star formation. Okay, you see? Bearish, no tail lower, pretty dodgy one, undecisive one actually, because we have a very small body candle and a big tail to the up tail and lower tail, and a bullish one closing above the mid of the very first candle in this 3 candle pattern. So that looks like a morning star formation. So that it tends to be a bullish indication. Okay. So that's something that you can keep an eye on. So already broken the 23.6 Fibonacci level from November's performance. So a break of 38.2, so a break of $81 mainly, a break of $81, okay, is quite key. As we said, $81, it used to be a nice, strong support level for more than a month, now converted into resistance. It is a round number. It also confluenced with the 38.2 Fibonacci level from November's down leg. And along with this morning star formation could indicate the return back to the upper Bollinger Band area, so above the $83, 85, and even potentially, if there is a strong bullish bias, to return and retest the 90 territory. So that's something that you can keep an eye on. I mean, we don't have any confirmation yet, so keep an eye on 81 because it's considered to be an important level for all the reasons that I have just mentioned. So let's move on. Gold. And gold by Lawrence, by Roy. By Martin. By Burafa. Okay, so gold. Interestingly, so this is the 1 hour chart in gold. Okay. 1 hour chart in gold, and the reason why I've put that on is because I wanted to show you. Let me get rid of that, and let me fix a bit these lines. Okay. I've connected yesterday the highs and the lows, the latest highs and the lows. So the latest fractals, to be more precise. First fractal, second fractal, third fractal, fourth fractal. Connected them and had with a trend line, and then connected the bottom, the lower fractal. So it gave me a triangle, which was broken, if I'm not mistaken, on the European Open this morning. Yes, at 10 o'clock server time, broken and extending lower. Interestingly, holding a support the last 3 hours above 1758. So that, if the asset, that's a bullish sign, the breakout of a triangle to the upside with the asset holding above, outside this triangle, that could that's tends to be a bullish indication. It comes in line with rising RSI and rising MACD as well. So Bollingers are expanding higher and upwards. So there was a correction, as you can see over here, because the asset was outside Bollingers. However, it held support over here. So that support, the 1750, will be key, because a move back below that territory could indicate that the asset is back in track with a reversal. So just here we are. I have put the 4 hour chart on because I want to show you the next key resistance levels for gold. So the next one is November peak at 1764. That's the very next resistance level for gold. However, as we have seen over here, the flattened Bollingers, the flattened MACD that 4 hour chart shows, suggests that the gold remains in a pretty much consolidation mode. So a failure to extend and break the 1764 level could imply to a reversal back to the to retest the bottom of the range. So keep an eye on a potential reversal, failure to break the 1764. Flattened Bollingers, flat MACD at 0, more precisely, suggests that this could be a limited upwards move, and the asset could revert back to the bottom territory. So, if we are in a range, the asset tends to reverse on the top of the range and bounce at the bottom of the range. And this is what we are seeing from gold for the last 7 working days. 7.5. Sorry, yeah, since 20. Let me be precise. No, it's nearly the 2 weeks. Yeah, 2 weeks. 2 weeks. So let me just also use just to check Bollinger's. So yeah, what we are having right now, as I said, RSI is still rising in the 1 hour chart. Stochastic has posted a bearish cross, but it's still it's still on a higher lows situation. So that implies that we don't have a bearish signal from stochastic for the time being. The fact that fast moving averages keep pointing higher suggests that the bulls are still in control, with the next immediate resistance level at 1764. Now, daily. Let's put the daily chart on. We had a nice how can I say that? Yeah, we are okay. After the strong rally on on the dollar weakness in the beginning of November, we have seen the asset turning lower and holding, however, holding the 20-day moving average as a key support level. But the bullish cross of the two moving averages, the daily moving average 20 and 50, along with the fact that it has been held within the 1700s territory, kept the medium-term outlook for gold positive. So look at all this. So bullish cross, so 20-day moving average above 50, and you can see that they keep moving apart. They keep moving apart, implying to potential development of an upwards trend. Support for a month now. The asset has been held actually for a month now above the 1720 territory, so it's above the 1700s in general territory, something that was a key resistance in September and October. So crosses the move about having a floor at 1725, bullish MACD, so a steady positive MACD, even though it flattened a bit in line with this latest 1 week consolidation, but remains well above zero. RSI holding at 60. All these implied that the asset is still facing some increasing bullish bias. So the way for this picture to change, it will be if that nice floor over here breaks eventually, and we see a decline and a pullback below that. If we see something like that, then the extensions over here that I have put on will be some potential floors that the gold could retest. To the upside now, on the flip side, as I said, 1764 is key. On a break of that, November's top at the 1786 will be the next important resistance level for gold. Let's move on to cable. Show cable. And in the GoToWebinar, we have questions regarding pound Oz. gold. We've seen gold, Hillary, so I will do S&P 500 as well. So Emmanuel, okay, I'm afraid if you're brand new, if you just started learning what the financial markets are, what is trading, it's not the session for you. You need to start with the very basics before attending a live analysis. By very basics, I'm referring to very basics. What is financial market? What is trading? What is an instrument? What very basics. Please go through our educational material in the website, and if you need more help and more educational material, please send us an email. Biobello, I've seen your comment in regards to dollar index. I will be back to you. So in the GoToWebinar, dollar index and S&P 500 are pending, along with pound Oz, which was my big mover this morning. Okay, guys, I'm with you. Just give me a second. So pound dollar cable first. Cable. The remarks and the comments this morning from Bailey and Peel, Bank of England Bailey and Peel didn't really had a significant impact on cable. Okay, we have seen a pullback during their speech, but you see, it just reverted the previous hour's gain, so it didn't really change the bias, the situation in cable. So what we have, they posted a lower high once again. You see that 1, 2, 3, fresh one. We have a double bottom and a very important bottom at 119.40. So a bit of a pullback, flatten moving averages, flatten Bollingers, flat MACD, 50 RSI at 53, still flat. So it's a very undecisive condition over here. It's a very neutral situation intraday for cable. Let me keep an eye on the 30 minutes chart. So with evening star formation, but it has been held over here. Stochastic turns points lower. So we have contradictory moving average in the 30 minutes chart. From the one side, we have a bearish stochastic, but a bullish RSI, and slight slope to the upside for moving averages, but yeah, still struggling in the 120 territory. So it could retest again that latest high. So another 10 pips high, but there is a lack of volatility. Yeah, so you can see that the comments from the Bank of England members didn't really affect significantly the market. So let me just get back to the daily chart. Actually, since I connected in the 1 hour chart the highs over here, it looks like a descending triangle again with a flattened bottom, but there is no indication of a breakout or a change on this neutral move, in these neutral moves. So yeah, we need more indications in order to suggest that cable could either turn to 121 level or even higher to November's peak. The momentum is it's at zero. Yeah. Yeah. Not so exciting about pound dollar. But let's move on to pound Oz, which was one of the biggest movers um, of the day, at least in the Asia session and in the beginning of the European session. So here is the 1 hour chart. Oops, sorry. Which we have seen a nice strong pullback, keeping another, so having posting a double bottom over here. But this looks to there are some bulls defending this floor. Okay, where's that's this is pound Aussie. We'll put that on pound Aussie. So this is pound Aussie, guys. Okay, so that was in the European Open. There was a resumption of the downtrend, but failing once again to move below the 178 level. So that that implies that there are some buyers defending this territory. Indeed, there is an increase in negative bias intraday at least. So if I put the 30 minutes chart, we'll be able to see that as well. So turn down, rebounded slightly, but again is trying to extend back to 78 and even break it. So lower moving averages, extending MACD southwards, bearish stochastic with the with which it's on the overbought territory, but there's still no indication of a pullback. RSI at 37, so there is in the very short time frame further bearish pressure, but the 78 is crucial. It's a double top bottom, so we could, that could be an indication that it could bounce again at that territory. And if I just overall, however, so let me just put some support and resistance levels for you as well. So the key support is at 78. If that breaks, then let me just be precise in this latest. Look at that. I've put on the Fibos for November's latest up leg, and interestingly, the 178 to 177.80, that territory over here, is a confluence of this double bottom and the 50% retracement level from this latest rally that we have seen. So that implies that turns that area an even more important support level, because if that breaks, we could, the next floor is down to 77, even 76 and 75 territory. So like the bottom of the uptrend. Okay, now on the flip side, so in, as I said, is posting some kind of a descending triangle with a flat bottom. So put a trend line on and keep an eye on any decisive breakout of your triangle. If that happens, then the 50 period moving average or the edge, the upper edge of the Bollingers could be treated as immediate resistance level. So 179 and 179.25 for the time being. So yeah, that should be around 9. Yeah. Okay, now daily chart. Let me get rid of this and this. So the medium term, so daily and weekly chart, consolidation remains the case, neutral outlook, sideways movement, it has been the theme for the last 2 months, and that remains the case. You can see that even the 50 and 200-day moving average have clashed, and they are completely flat along with the Bollingers. So the asset has stuck within the 175 and 181 territory, and there is no indication for the timing that this is about to change. Yeah, so we have done pound Oz. What's next? Joseph is asking about, I guess, are you referring to cable or are you referring to the US GDP data? I guess, okay, so any indication today, guys, I'm gonna get back to the dollar since anyway, someone asked for it as well. Was it? It was Boy Bello, yeah. So I'm getting back to dollar since Joseph asked about US GDP data today and Bello for dollar index. I'm gonna get back to dollar index. So any indication today? Okay. So it's let me just where is it? You should have economic calendar for the day. So today is the preliminary third quarter GDP number from the US. The expectations are in line. I mean, are on the expectations are for an unchanged rate. So 2.6% for the that's on. Sorry, give me a second to make sure that this is what I've seen is actually correct. Yeah, third quarter is expected flat at 2.6%, so unchanged the quarterly in a quarterly basis, while the headline, come on, the headline is at 4.1%, so again flat. So any lower number than that implies that there is a bit of a slowdown in the US growth, economic growth. Any boost number higher could be the vice versa, could be positive because it could indicate a slight growth in the US economic activity. So that would be good for dollar, while a lower number and a hint about even a slight slowdown could be negative. But as I said, it might be easily ignored because of Powell. So keep an eye on this triple fractal, so 106.70, and this immediate support. That will be that double 106. Will be this double bottom over here, the earliest bottom of the day at 106.30. So keep an eye on your immediate support and resistance levels during the announcement. S&P 500. The stock market was pretty mixed overnight, at least, and remains quite mixed. You can see very small body candles, lack of direction, lack of volatility, a lot of cautiousness. So let me just that doesn't help. So I'm gonna get rid of that. So what's your question, dear Hillary? Okay, let's start with the daily chart then. So in the if we consider the whole year, okay, just for your own, let me just correct this bit. So it's too tight. No. Yeah, that looks much better. So for the whole year, we have seen a falling stock market, obviously with some fluctuations, but overall the trend. This is a daily chart presenting the whole year. So it's a falling market with some bounces and some fluctuations to the upside. So overall, the stock market, and more precisely S&P 500, this is the one that we're looking right now, remains in a negative outlook. However, this comes in contrast with the. Let me just. Okay. However, in the final quarter of the year, we have seen another leg to the upside that is testing once again the 200-day moving average and the upper trend line of our 11 months channel. It's a daily chart. You see, bounce, break the midline, broken the 20-day moving average, the 50-day moving average, and retest once again the 200-day moving average. This is something that also happened back in July. This is something that also happened back in March and April, when we had the initial very first time after a long time that the asset it was bouncing around 200 up and down for the whole first quarter, and leads eventually settled below the 200 in April, but it hasn't managed to break and move above the 200-day moving average since April. That's why this is not an important trend line simply because it's the upper trend line of a channel, but it's also the 200-day moving average. So will it manage to extend above it and hold the move above it, indicating that this long downtrend is running out of steam and we're gonna see a long uptrend? Or will it fail and post another leg lower, another fresh lower low on this long-term downtrend? So this is something that you should keep an eye, especially as we're moving into the end of December and the end of the year. And in general, this week and the week after, whether it's gonna signal failure to extend to break that level, or whether it will start moving lower and retracing and potentially indicating a return back to the 3500s territory, or even lower at 32 highs territory. Are you with me? I mean, down, up, down, up, down, up. So will it goes down having a new fresh down leg, or that could indicate or it will break it, and it could be the start of a new uptrend eventually. There is nothing hinting on that direction yet, but it's just to put these lines on and to have it in mind, because it will help you in December's trading or even January's trading, and etc. Now, keep an eye on the latest performance. Stuck within the 200-day moving average and the 20-day moving average, which is also the around 3900s. So 3900 is the key support, immediate support level, and the 200-day moving average, or if you prefer 4057, is our immediate resistance level. So this is in the daily chart. Now let's zoom in the 1 hour chart. We see very, very small body candles, but there is an upwards trajectory in MACD. Okay, rising, and the same stands for RSI and for our price action. But it doesn't look that the body of the candles are not presenting a bullish bias. They are very, very weak. So yeah, let me just, very, very weak. So there is a mixed outlook intraday. So attention still remains on the support and resistance levels in order to figure out any potential direction. So 3978, the very first resistance, and the key resistance, to be honest, is at 3989. On the flip side, that latest fractal, the latest two fractals provide some immediate support. So for the time being, is directionalist. Small body candles show weakness, show lack of volatility, lack of momentum. So they don't show any direction. So you just need to be a bit patient. The indicators are the same. MACD is rising, but it's close to zero. RSI is stuck at 50. Okay, stochastic is lower, but you can see that it already started flattening. Yeah, there's nothing to help us for the time being. And we did dollar yen. Okay, dollar yen was one that stuck on the 38 and 39 territory. So another intraday channel over here. And I need to get my standard deviation higher, sorry, because it doesn't satisfy my channel. That looks much better. Much better, I think. Where's my... No. Sorry, Tim. Yeah, much better. It's in a channel stuck between 138 and 139 territory, even though I need to put the lines. Okay, I'm gonna keep it as it is actually. That's much. No, that's wrong. Okay. Whoa, now is correct. You see, connecting the three fractals, connecting the bottoms, we have a nice channel. And I will put the 30 minutes chart because I have just noticed a cross below the midline of our very, very short time frame channel. So that implies, along with the pullback, can you see the pullback of these moving averages, the pullback of stochastic, the pullback of RSI, implies to potential retest of the bottom. 138.40, 138.38. Remember, in a channel, a break of the middle line implies to potential retest of the next line. And this now we have from the upper territory, you have a break and a move below the middle line. So that it could imply to potential retest of our bottom. Okay, I think that was helpful enough. daily now. Don't forget that dollar yen is a safe haven. Okay, that's why it was a bit. It was. That's why it wasn't yen wasn't in bid lately. So that's the daily chart. Very, very important floor is this 3 months support at 137 territory. Bearish cross 3-4 days ago with 20 below 50. Very, very important. Something that we could keep an eye on. MACD completely negative for the first time. That's something that happened in the mid of November. So in the mid of November, the asset, after being very well supported from the 50-day moving average for how long? Since it's been supported. It has been supported by 50-day moving average since August. Yeah, since August. There was some failure over here, but kept above it again. So the 50-day has been for many, many months supporting very, very well the dollar yen. But 2 weeks ago, 20 days ago to be more precise, the asset managed to move well below 50-day moving average after how many months? Sorry. A year. Sorry, it's a year. That's August 2021. After a year, moved below the 50-day moving average. That was a very fair indication that this very long down uptrend might started posting some hints of a reversal. Another hint, that bearish cross of 50 and 20, MACD negative, RSI declining. If I connect the highs, see a decline in RSI. But there is a strong support still over here. So as long as this level is not broken, it doesn't fail to provide further support, then we cannot really confirm the reversal of this long-term uptrend. If this level breaks, even though it looks unlikely for the time being based on the candles, you see small body candles, indeed long tails retesting this floor but failing to break it. So a break of it, though, could find a very important next support at 135. I will round it up. See, this 135 is a confluence of 200-day moving average and the lower Bollingers. Okay. Yeah. That's what you need to keep an eye on. There are some hints for the time for a potential reverse of this 1 year uptrend of dollar yen, but we need further confirmations. And of course, the breakout of this territory over here. Dollar CAD, ooh, nice one. Carl, ICT, I'm not sure on what you are referring. You mean the telecommunication industry? Are you referring? Nothing comes to my mind other than the telecommunication industry, computing, etc. Are you referring to that, or am I completely wrong? Let me know. Let us know. Dollar yen, dollar cat. Sorry, dollar cat. Very very interesting cross. Very interesting cross. And why is that? Okay, because it's at the mid of this down leg. At the mid of it, above 50-day moving average. And I will put on purpose the weekly chart just because I want to show you that regardless of this strong down leg that we've seen in October, it managed to hold its upwards trajectory for the year, and it managed to remain in the up above the 20-week moving average, and recovering already nearly 50% of this correction. So for the time being, this looks to be a correction. Filipino forex trader, yes. So you're probably Carl, since you are in Philippines, you're a Filipino one. So you probably have seen our analyst in the Philippines, Danres. I'm not sure whether you have seen Danres webinars before, live analysis before. So we have a local as well analyst. Oh, she's brilliant. She's brilliant. So in regards to ICT, inner circle trader, is not something that I have used in the past. So I don't want to go in depth of it because I'm not really confident for this kind of trading. I have never used it. So before if I'm not using something, I wouldn't like to demonstrate it since I have never tried or at least expertise on that. What I wanted to say about that, sorry, I lost my words. Yeah, so as I was saying, to be honest, I have not really tried. So I will have a look at it, but I haven't really tried in the past, so I wouldn't like to say anything in this live analysis about it because I don't want to confuse people, and I'm not, as I said, I haven't tried in the past. So let's get back to dollar CAD. But if you want something more, Carl, please contact us at the. Perfect. So I will post here our email address for everyone to see, just in case you need any further help that requires more details that we are not allowed. We don't have the luxury of time in this session. So I'm posting our email address over here for everyone to see. And I just okay, it's fine. From my phone. Okay, sorry. So here we are. Oops. Here we are. No, I posted the wrong thing. Here is our email address. Yeah. So if you want me to find out more details or you want help with it, let us know. Okay. So I'm gonna get back to dollar CAD. Yes, as I was saying, nice rebound over here, recovering the half of October's losses, holding above all moving averages in the long term, suggesting that remains in an upwards trajectory for more than a year. Not a year to be precise, for the last 2 quarters. So 136. 136.80, the key resistance level, which if it managed to post a breakout on those territories, it could indicate the return back to 140. That's in the medium and long term, guys, okay? That's a weekly chart. To the flip side, however, 135 remains the support. It indeed is moving above it, but let me just zoom in the daily chart. You see, indeed, so far today, even though it has a small pullback, it still move above it. But thank you. So, but that other than the fact that it's a Fibonacci level, is also it has been seen as a nice support level for 2 months now. So it remains a key level to be closely watched, because if we see today or in the next few days a pullback below it, that could turn to some weakness for dollar CAD. So 135, 136, the very next immediate support levels that you should keep an eye on. Now, intraday. After yesterday's overbought condition, we had a pullback back to 35 and falling MACDs, falling RSI, falling stochastic, implying to in line with this pullback. But you can see that they have flattened. You see, flat, right? MACD hasn't turned negative; it's at 0. RSI though is still no, RSI is actually for the time being it's like flat. That could suggest that the decline has run out of steam, and it could settle at 135. But yeah, it's also that power thing, so that keeps the market in general a bit choppy. Yeah, keep an eye on that. That floor, that could present some kind of a floor. However, any further hawkishness tonight, or even a slowdown on the slowdown on the USGDP, it could pressure the dollar CAD even more, breaking the 135. But that for the time now, this decline looks limited. It's running out of steam, at least based on what our momentum indicators are presenting. Okay, Kiwi and Euro dollar, and I will call it the data as soon as I thank you, Kai. As soon as I do the last two questions from Ashar and Alem. So Kiwi CAD and Euro dollar. If there are any further assets that you want me to cover, please stick it in the question box and the comment box as soon as possible. There's nothing in the go to webinar. Okay, Kiwi CAD. Since we're speaking about CAD, Kiwi CAD. Kiwi CAD. Okay. Yeah. Kiwi and in general the antipodians were in a significant outperformance lately. Commodity related assets, risk sensitive assets. So that is responsible for that, along with of course their economic data and the tightness in there from their central banks, but in general finding a lot of boost from risk appetite. So we have, that's a daily chart, by the way, clear, nice, smooth uptrend, right? It cannot be clearer than that, right? I don't need even to put the channel because not that it's it just, you can see that very, very clearly, very, very smoothly. But what I would like to do, just give me a second here. Connecting the highs of the years of, since this peak in January 2021, so nearly a year. Because I wanted to show you this this breakout. However, this is not confirmed. In order for this candle to be confirmed, we need to wait for the week to end. So that will be on Friday night. But 1, 2, 3, 4, 5, 6, 7 consecutive bullish weeks, okay, for Kiwi cat, rising positive bias, boosting the asset, extending above 20 and 50 week moving average, and potentially could extend above this long downtrend. If that confirms on the closure of the week, at the end of the week, the next important level is obviously the 200-day moving average. Not only because the 200-week moving average, but also it used to be a very long-term support level since April 2020 up to October 2021. You see that? That looks now to be converted into a very important resistance level. That's something that you should keep an eye on the Friday's closure. Now, daily. Yesterday's candle was a nice, strong, lengthy bullish candle. You see the size of this candle in comparison with the previous 3 days. So that just strengthens the possibility of a continuation of this uptrend. Yeah, you see, nice and smooth. Rising momentum MACD. I will get rid of stochastic because we are in a daily chart. So nice, smooth, rising MACD along with the candles over here. The same stands for RSI. And I will have RSI in this form. So I want you to see that it keeps posting higher highs. It is in the overbought territory at 76, but remains. There is a further sting to the upside, further area to be covered, and there is nothing really pointing for the time being that this rally is running out of steam. Immediate support holds in this 5 days floor at 83 round number, but even if the asset comes down to over here, it doesn't change the upwards trend. Okay, only a turn back below 82, 81.50 territory could change, could imply to a reversal of this 2 months rally. Actually, the rally has been another indication of that this rally is not running out of steam. It's also this bullish cross of 20 and 200-day moving average. So rising MACD, nice and smooth, rising RSI with higher highs and higher lows, clear trend, and a bullish cross of 20 and 50 and 200 remain in line with a bullish positive outlook for Kiwi CAD in the medium term. Now, let's shift intraday to see what's going on. Something looking like a hummingbird. Triple top, failed to break it, but still posting, still in a still holding the gains, the gains of the last 2 months. Flatten Bollingers, flatten moving averages. Let me just put that stochastic as well. Lower stochastic, but you see that it ran out of steam already. It flattened already. So that's a sign of just sideways consolidation intraday. So 180 is 0.8430 is the immediate support level, and this triple top, which is presenting today's and yesterday's peak, is our immediate resistance. So a move below 84.30 could retest yesterday's bottom and lower Bollinger Band territory at 0.8407, while a rebound and a break of the 2 days high could extend higher with the next immediate resistance level at, let me just put it correctly. We have over here 84.62 and 84.80. That's on the break of the latest 2 days highs. And I'll finish with euro. As we said earlier, holding some gains, but fluctuating around 200-day moving average for 2 weeks now. So yeah, flat intraday. Everything depends on the dollar. Everything depends on Mr. Powell. The 2 days, the weeks support levels at 0.103271, 31.80 are the immediate floor for euro dollar. To the upside, the high that we have seen earlier today at 103.80 remains as a key resistance area for the intraday, for the day, in the immediate support, in the immediate resistance level. But the very, very flat trading for the time being. Yeah, not really. Yeah, so that was pretty much it from me, guys. I can see that there are no further questions, so I'm gonna call it a date. So yeah, have a great day ahead. Take care. So there are take care. We are still less than an hour ahead of ADP and an hour ahead of second quarter GDP from US, and Mr. Powell, who is tonight, 6:30 GMT. So keep an eye on that. Take care. Have a great day ahead, and we'll see you again on Friday with a live analysis on the non-farm payrolls. It's a jobs week once again. One of the most volatile events of each month. So see you again on Friday. Thank you. Bye-bye.